This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through all the business news stories you need to know about from the continent and beyond. But first, a quick run through the markets for you. So let's start in the banking sector. Africa's largest bank by assets at Standard Bank reported first half results today. Essentially, it was first out of the gate. As expected, plenty of pandemic-related damage. Non-performing loans tripled to over $650 million. The personal and business banking divisions were the hardest hit elements of the portfolio. Earnings were down by over 40%. Its shares have fallen by over a third so far in 2020. Here's what's coming up tonight. South Sudan's foreign exchange reserves have completely run out. Uganda Central Bank warns of uncertain times ahead given the COVID-19 pandemic. And we'll explore the effect of the COVID-19 pandemic on the job market in the United Kingdom. But we'll start the hour in South Sudan, where the central bank there says that Africa's youngest country has literally run out of foreign exchange reserves, and it doesn't have any resources to stop the further depreciation of the country's currency, the South Sudanese pound. Now, since independence back in 2011, and back then it had about $2 billion worth of reserves, South Sudan's economy has been battered by a combination of mismanagement, corruption, and a 5-year civil war that mostly ended in 2018. After splitting from Sudan following a decades-long civil war, it took roughly 3/4 of the oil reserves, setting up the young state to be wholly dependent on revenue from oil sales to fund government operations. South Sudan's current oil output, however, is about 180,000 barrels a day. At those levels, it's 30% lower than peak output of about 250,000 barrels of crude every day. Let's discuss this story in a bit more detail. Patrick Oyet joins us now from the capital of Africa's youngest country. So, Patrick, let's start with the market for currencies first. South Sudan has 3 exchange rates at the moment. There's one offered by the central bank, there's one offered by commercial banks, and then, of course, there's a parallel market rate despite floating the currency back in 2015. Why hasn't the country been able to eliminate the parallel market?
Yes, Ramah, there are many challenges. And as you correctly said, in 2015, of course, the central bank started floating the currency. That means basically the forces of demand and supply are supposed to determine the exchange rate. This does not happen. There are 3 parallel rates, as you have just said. The root cause of the whole problem is actually in the war, because prior to 2013, the country was moving well. The central bank was playing its key role of in any central bank of any country, controlling the commercial banks, ensuring commercial banks have reserves to the central bank. But when the war broke out, the government borrowed money from the central bank, including the reserves of the commercial banks. Now, when commercial banks wanted to get their money from the central banks to carry out their businesses, they could not. And that made the central bank to give a free hand to commercial banks now to do as they please. And where is the problem in this case now? The problem is that at the moment, each commercial bank flies in its own money, and when the money comes, it sets its own rate. So the central bank will set a rate, but if I am Kenya Commercial Bank or Equity or, whatever bank, I can fly in my money, I bring straight to the bank. I don't have to pass through, the central bank, and I set my own rate. So you have a rate set by the central bank, you have a rate set by the commercial bank, and even each commercial bank sets its own rate. And then you have now the parallel market. And who is supplying the parallel market majorly? You have the aid agencies, the UN, that also fly their money in. When they fly their money in, they pay their staff. When they pay the staff would prefer to go to the parallel market, to the black market, where at least the rate is higher than the rates you find at the commercial bank and also at the central bank. And then coupled with the problem of people carrying cash, because many of the business people in South Sudan still keep their cash. They would not want to take the cash to the bank because of years of war. Sometimes you had your money in the bank, you would go to the bank and not get money. So people have that lack of trust with the banks. So all those are the problems that are really making it very difficult difficult for central bank to have control over this exchange rate, Ramah.
Indeed. So back in mid-July, the central bank also cut the cash reserve ratio for commercial banks down to 10% from over 15%. But has that effectively translated into more lending to the companies that are operating in the country, or is there simply no demand, no appetite for these loans?
Very, very little impact in terms of, lending to persons, whether they are legal persons or they are households. Very little impact. Reason is that, first of all, the problem of collateral in South Sudan is complicated in that, for example, you can take, for example, a piece of land or a house as collateral, but when you give and later when you default to pay the money, when the bank goes to look for legal redress, to go to court, sometimes even if the bank wins a case and supposed to take over the property to recover their money, implementation or enforcement of those laws are difficult. The legal system is not that strong. So many of the commercial banks would prefer not to go into such, complicated situations. So they would just not give loans. Prior to the war, they were giving some loans. There were salary loans and things like that. But, of late, it is extremely difficult for businesses to acquire loans, for households to get any loans.
Indeed. One last question for you, Patrick. What is the central bank doing to at least try and rebuild the country's foreign currency reserves? Are they exploring borrowing cash perhaps from various sources for this, or will they rely on domestic gold purchases in order to build up the country's reserves from the ground up?
Yeah, the central bank is saying they have set up a number of measures they want to put in place to build the reserve. One of them, they say, of course, they want to borrow money, but they are facing challenges to borrow money from international financial institutions because they are demanding for transparency, for accountability, which is something which is not yet very okay in South Sudan. And then another thing they are saying is that they are going to buy gold, which is locally produced in South Sudan. They say they have already actually started purchasing those gold. They would refine it and try to build reserve. They're also facing challenges. Actually, the deputy governor was telling us that the challenge they're facing is that when they go out to purchase this as a bank, it becomes so complicated. So they are looking for some companies that could actually go and buy the gold and then they get from the company. So it's still also a challenge in as far as getting the gold is concerned. They're also saying that they want to regulate the way they can purchase also what is called gum arabic. Gum arabic is used for making things like the gum people use in the chewing gum, rubber like tires and football and so on. So it is also something that is produced in South Sudan in large quantity. So they say they would like to come in and start purchasing and exporting so that they can also earn some foreign currency. They have also said that they want to cooperate with the Ministry of Finance to have a memorandum of understanding so that the oil money can come actually through the central bank, because at the moment the oil money comes through some commercial banks. So that is also a challenge. They would like the money to come through the central bank, and some percentage should go to building the country's reserves. Ramah.
Indeed, monetary policy right at the margins. Patrick Ayathe in Juba, thank you. Now, the United Kingdom-owned CDC Group has committed over $75 million to a trade finance deal with South Africa's Absa Bank. Since October 2019, the development finance institution has been working on trade finance deals with Absa that aim to essentially close the trade financing gap that businesses face in some of Africa's most vulnerable countries. The Absa CDC deal will focus on supply chain support in very specific sectors. Healthcare and agriculture in particular are in focus during this COVID-19 pandemic. Let's explore this in a bit more detail. Admir Imami is the head of trade and supply chain finance at the CDC Group. He joins us now live from London. Admir, thank you very much for your time this evening. But let's start with a broader context. Even before this pandemic landed on African shores, there was still a large deficit in trade financing, estimated at over $100 billion a year. But since COVID came to Africa, how has that affected demand for trade finance, especially across sub-Saharan Africa?
Hi, Ramah, and thank you for inviting us to the show tonight and your interest to kind of share our experience at this sort of time. The issue with Africa is it was unique. The Africa wasn't sort of only fighting with the pandemic, but also in the market, across the market, there was also the drop of oil price and also the currency depreciation. So all combination enhanced the problem that we had across the continent. However, this forced a lot of international banks who were very active in the market to stop lending or even reduce the appetite for Africa. However, this hampered the import of essential supplies such as medicine, commodities, and food staples, which was essential to mitigate any sort of a pandemic crisis. However, we as a CDC, our role as a DFI is to be counter-cyclical, which means that when others do step out from a particular market, in this particular case, as it happened in Africa, our role is to sort of step in and provide the necessary liquidity.
Indeed.
So for the first quarter of 2020 and for the second quarter of 2020, I think the number that we have of trade that we have supported into Africa is about 1.2 billion. And we wanted to make sure that this sort of helps and prioritizes the support of agriculture, healthcare, and manufacturing. For CDC, trade finance is a key pillar to CDC's response to COVID, and continues to be. And want to make sure that we expand the availability of the trade finance, and its availability is also central to how we see we could sort of help and mitigate the impact of COVID-19 in Africa and in the continent.
Indeed. One of the things that stood out when I was looking at essentially your outlay, the rationale for where you're going to put this money, is that you're focusing on three specific sectors. Agriculture, which accounts for the bulk of GDP in many countries, healthcare, which often is very underfunded, and manufacturing. So why those three specific sectors? Why are they of interest to CDC?
We are sort of we're committed to really support all the sectors which help drive employment, help accelerate human development. However, in the case of COVID, we wanted to sort of prioritize these three sectors. I think very simply, food is because we want to make sure that there was a supply of staple foods in the market where a lot of people depend on a daily basis. We also wanted to make sure that there is a priority and liquidity to support any imports when it comes to PPEs or any sort of other healthcare in order to fight COVID. And also we wanted to make sure that there's enough liquidity for different manufacturers because they tend to generate most of the, or to keep the employment going and making sure that there is a local supply of goods and that doesn't sort of disrupt. So overall, when we thought the best way we could sort of fight and mitigate the COVID is to provide support in these three sectors.
Agriculture, though, is among the sectors you're targeting, as you mentioned, with trade finance and de-risking facilities together. But looking at the data on where banks are lending their money, agriculture usually tends to be avoided or ignored. In Kenya, for example, lending into agriculture accounts for about 3% of the total portfolio. Since banks here tend to avoid that sector, what is it that you're seeing that essentially tells you it's entirely okay to actually put some cash in here?
I mean, the shortage of access for SMEs is not only for Africa, but it's across the globe. And again, through our systemic liquidity, it's not only that we provide liquidity to our partner banks in Africa, but we also provide the credit enhancement that would allow the banks to take a lot more SME risk, especially in this sort of market. So with our partners like in the country like APSA, SocGen, FirstRand, TDB, and Standard Chartered, we see their ability to make this available, this liquidity and this credit enhancement to SMEs. Most of the beneficiaries of our facilities are SMEs, and we want to sort of support that. We continue. Also another key factor upcoming is really climate change. And I think with the climate change, we are going to see a lot more sort of impact in the agriculture. However, we are committed to be able to support this particular sector, even with the challenges, with the upcoming challenges of the climate change.
Indeed. So liquidity, of course, is one thing, but the cost of credit is another key determinant of whether or not SMEs actually get through this crisis. So for the SMEs that might be watching this from South Africa, Kenya, Nigeria, what is this going to cost them if they walk into ABSA or Société Générale and say, look, I'd like to tap into these facilities?
So to give you a bit of a, so what happened during the COVID time, or the last sort of the first quarter, we saw increase in pricing. And that's also for the banks like the banks that we sort of lend to. So in crisis, by default, there is a particular increase in price. However, the way we want to sort of support that and mitigate that is by providing the support to our banks and by providing the liquidity. And also the credit enhancement that we provide to our banks, so that risk doesn't really get transferred to the market or the SMEs. So maybe that sort of kind of helps out. How do we sort of help these banks further lend to SMEs without sort of increasing the price?
Indeed. One last question for you. Provisionings among banks, it's rising really aggressively as this crisis rolls on. As I mentioned a little earlier with Standard Bank results, we're seeing one warning after another of much lower earnings or wiped out earnings entirely. So banks may have the capital because we're seeing that given their behavior in the bond market, but how strong is the demand for credit here? Can banks really be effective market mediators even when you're giving them cash, but they're worried about how they're going to stay ahead of this rising tide of bad debt?
We do have a long history of working with different with partners in the financial sector, and we are committed as CDC to make sure that the sector is liquid and that we are there to provide them the necessary liquidity in order to make sure the financial system across Africa is sustainable. We anticipate there's going to be a need for more trade finance sort of liquidity. And we have sort of demonstrated that across our activity in Africa, and how we provide this sort of funding even in the crisis. The latest being the Ebola crisis, where we partnered with Standard Chartered, and we provided the liquidity into to businesses in Sierra Leone. So I think it's important for the financial sector in across Africa to be sound and provide them the needed support. I think with that sort of without the financial sector, I think in a market as it is today, where we find all pandemic, the situation will be a lot worse. So I think we are here to, again, we're committed to support. We are helping or partnering with banks like mentioned earlier, TDB, Afro-Exim, Standard Chartered, etc. At the same time, we also have a direct equity to banks. One bank in Kenya is INM, and also a regional bank, Bank of Africa, through our investment through BMC. So to answer your question, the demand is there. The demand will be there for facility, and depending on sort of the needs of the banks, we'll be there to support them today and in long term.
Indeed, we'll leave it there for the time being. Admir Imami from CDC, thank you very much. Now, on to Zimbabwe. Even before COVID-19 hit, Zimbabwe's real estate market was already struggling fairly hard due to the country's numerous economic crises. The pandemic, however, has compounded the problems that the sector is facing. Property sales have fallen by as much as 40% as both buyers and sellers essentially sit out the market and wait on the sidelines. With the details, here's CGTN's Farai Mwakutuya.
From a sales perspective, we've had a very big reduction in terms of the number of sales that are going on.
As much as 40% across the entire industry, according to the Real Estate Institute. Though asking prices are holding for now, that could change the longer the crisis persists.
I have advised recently some of my clients who are eager and anxious to sell. I've told them that, look, why don't you take a maybe 10% knock in your asking price? Some maybe as much as 20%. You know, if we see that nothing's going on, the property's been on the market for a long time.
Rentals have also been affected as tenants' capacity to meet their obligations is restricted by lockdowns. With everyone in survival mode, value for money is now top priority.
Owning and renting a property, it's a relationship, and the landlord can't just demand and the tenant can't just withhold. You have to meet in the middle and show each other open book. Hey, this is what my turnover has been like, and then you make an informed discussion on that. So the effect of COVID has been to reduce volumes, opened up the negotiation around price, be it on rental or be it on sale, and it's brought keener sellers and keener people to invest in properties, because now it's such a crucial decision that the pricing is absolutely right.
Properties value retention will keep the sector active.
People are likely to make 20, 30,000 more than they're likely to make 200,000. What that then means is that people are more comfortable purchasing plots, just stands, and building, which they can do gradually. In the short term, I am concentrating on what we call bread and butter. That is the hanging fruit, the low hanging fruit, the small properties. So, for instance, instead of putting efforts on marketing a $2 million property, when you know that we're not seeing a lot of international investors or diasporans bringing money into the economy, you look at the locals and you look at what they can afford, and that's what you sell them.
The wide distribution effects of these self-built developments will be good for an economy that's battling to weather the COVID-19 storm. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
All right, then a company news wrap. Let's start in the world of commodities. The South African miner Gold Fields has doubled its first half profit as a rally in the price of gold essentially offset mining disruptions from the coronavirus pandemic. The Joburg-based producer's headlines earnings per share for the 6 months ending in June, that went up to essentially 20 cents a share from just 5 cents a share a year earlier. Gold Fields is pushing ahead with plans to build an $860 million mine at the Salares Norte project over in Chile. The miner says work on the project has not yet been disrupted by this pandemic. Over in East Africa, Samir Africa narrowed its net loss by 68% to over $500,000 in the half-year ending in June. The NSE-listed firm benefited from the closure of its troubled tyre business. Samir Africa closed the loss-making tyre unit in May, leaving it with just the real estate bit of the business, which it says is profitable. It had earlier estimated it would make a net profit of over $600,000 in the full year ending in December. Dubai-based airline Emirates expects to serve all of its 143 destinations by next summer, but flight frequency is going to depend essentially on demand. The Middle East's largest carrier stopped operations in late March due to the COVID-19 pandemic. It has since then resumed limited passenger flights. It's currently gradually expanding the number of flights it's running every day after Dubai eased travel restrictions. And 24 hours ago, Apple became the first US-listed company to hit a market cap of $2 trillion. That's about 6 times South Africa's GDP at this point. Shares of the tech giant are up by 1.2% to an all-time high of $467.84 on Wednesday to reach that milestone. They were 1.36% higher earlier today, over $469, bringing the market cap to around $2.1 trillion. Records just keep getting set here. The oil giant Saudi Aramco is the only other publicly listed company to have hit that $2 trillion market cap. It hit that point last December, one day after its record-setting IPO. That's the run for your company headlines. You're watching Global Business Africa. Time for a short break. Here's what's coming up next. Uganda Central Bank warns of uncertain times ahead amidst the COVID-19 pandemic. And we look at how the Chinese e-commerce giant Alibaba is helping to facilitate exports for SMEs in Africa.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sudan. Hello, Naro.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back to the program. Now, a robust economic recovery for Uganda is still pretty elusive as the COVID-19 pandemic continues to decimate incomes and jobs. That is the grim assessment from the Bank of Uganda, which is warning of uncertain times ahead. CGTN's Hilary Ayesiga takes up the story.
It looks like a typical rush hour scene in downtown Kampala, a sign that business is picking up. But traders say they are struggling to shift their stock as people are being much more careful with their money.
There are many people in town, but they are not buying. They want to purchase goods at a cheaper price, yet the capital is expensive.
Many here are worried that there are no guarantees life will return to normal after the COVID-19 lockdowns cost people their jobs and savings. Traders here say they are not making enough sales as they used to before the pandemic. That means they cannot meet their monthly costs of rent and other utilities. They are now asking government to give them tax breaks so that they can keep their businesses afloat. Some Kampala residents say money is hard to come by and they have been forced to prioritize their spending.
Number one, food. Because if you don't have food in your home, you'll be hungry. You will get sick. We're spending on medication right now. We are anything with survival, we are spending on that right now.
And for others, the fear of another series of lockdowns and a potential second wave are forcing them to rethink their spending habits.
If anything happens to me, where should I get the money? I've suffered in COVID-19. That's the last lockdown I suffered.
Uganda's central bank is also warning COVID-19 has hit both supply and demand.
Many consumers are expected to be hesitant to resume their previous spending patterns, partly due to fears of contracting the virus, but also uncertainty about earnings.
And in order to facilitate economic recovery, this month, the central bank maintained a key benchmark lending rate at 7%. Financial experts projected that the economy will grow at 3 to 5% for the next 2 years, but will remain below the country's potential growth rate. Still, like many countries around the world, there are hopes a potential vaccine, if and when that comes, could turn things around. Hilary Ayesiga, CGTN, Kampala, Uganda.
Alibaba, of course, is an e-commerce giant in its home market in China, but its presence in Africa so far is somewhat limited. But it's hoping to change that, though. The firm has started by slashing trade barriers and making it a lot easier for coffee farmers and boutique coffee brands in Rwanda to sell directly into a market of 1.4 billion people. CGTN's Daniel Arap-Moy has those details.
Alibaba Group, through the electronic World Trade Platform, is helping to connect African companies with consumers in China. A recent online event featured Rwanda's Gorilla Coffee, a brand from Rwanda Coffee Company. During its live streaming session, the brand sold its stock of 3,000 bags of coffee in just minutes. Senior manager of Alibaba Globalization Office in charge of African affairs, hopes to bring more African produce to other markets via the EWTP, stressing the importance of revitalizing global trade.
We definitely believe in the future of globalization. In fact, I'm very optimistic about the future of globalization. So actually, digital platform, digital economy, or digital infrastructure become even more important to drive globalization during this particular era when the world is impacted by the COVID-19 pandemic.
Rwanda's Gorilla Coffee, which is available on Alibaba's platforms, has seen over 20 million Chinese coffee lovers access the product through Tmall, a subsidiary online platform of Alibaba.
First proposed by Alibaba Group founder Jack Ma in 2016, the electronic world trade platform has been recognized by the G20 and has launched in China, Rwanda, Ethiopia, Malaysia, and Belgium.
The EWTP, an Alibaba-led initiative, aims to reduce barriers to global trade for small and medium-sized enterprises in Africa and globally through e-commerce.
We're trying to empower the Rwanda coffee producers to produce more coffee that is more tailored for Chinese people, Chinese consumers' taste. So in that case, we do see great future for its market promise in China.
Rwandan coffee has become increasingly popular in China, with branded coffee chains like Starbucks stocking it. Rwandan producers are now able to sell directly to a much larger set of customers than before, while bypassing costly intermediaries.
We were able to sell coffee. In 1 second, we sold 3,000 tons of coffee on the Jack Ma electronic world trade platform. We hope we can do more of that. Africa itself is doing the African Continental Free Trade Area Agreement conversations, where we hope to open our own continental markets to trade more, to trade better, and to produce more goods that eventually we can also sell to China.
Rwandan farmers who used to earn only $1 for a kilogram of coffee beans have since seen their incomes increase substantially since the introduction of the EWTP. For now, Alibaba has signed agreement with Rwanda and Ethiopia to develop EWTP in Africa. Daniel Arap Moi, CGTN, Nairobi, Kenya.
After a brutal start to 2020, Kenya's flour sector is slowly getting back on track as restrictions on movement and trade in key European markets and also here in Kenya are eased. CGTN's Nick Mudimba visited Kenya's flour-growing hub town of Naivasha. He filed this report.
2020, a year many would want to forget, especially those in the flour industry. Gradually, though, things are beginning to turn rosy. We visit Nini Flours in Naivasha, Kenya, a leading exporter to many parts of the world. Here, it's business unusual and stability is slowly being achieved after a difficult season. Workers are getting back to work, from harvesters to the packaging personnel, all are ready for another, hopefully, brighter season.
It has been difficult, especially the month of March and April were very, very difficult for us. It was just coming at the heel of the biggest sale we usually have, which is Valentine's. We do almost half of our sales during Valentine's, and we were just coming out of that. That means that we were still selling. And then suddenly we have a drop in the sales because we lacked demand.
Cultivating high-quality flours for the world market requires enormous resources and time. These farmers employed more workers. They are eager and determined to put the past behind them. It's been a tough season for flour farmers here in Kenya. At some point, they were harvesting for dumping, but right now the workers are slowly gaining the confidence in their employers with the fact that also they're getting back to work as usual. Now, there's something special about these farms is that they can't really waste a day without harvesting. Sometimes even harvesting comes after hours, meaning that they have to be at work all the times. It was so catastrophic that they were harvesting for dumping. The Kenya Flour Council wants freight services between Kenya and global markets to be increased. The produce is now at 80%, and if more cargo flights are increased and freight charges lowered, then the industry will be on the path to recovery. The floriculture sector was losing $30,000 a day 3 months ago.
and government has pledged to plug in 1.5 billion Kenya shillings into this to help us. We hope that it will come soon. We have lobbied around VAT, our VAT refunds, and at some point, a few months ago, they released about 60% of the VAT refunds, and that has helped a bit to cushion the growers on the liquidity side so that we continue operating.
It's full house in most of the departments at this farm, and operations are almost back to optimum levels.
We cannot survive without them. They are very important. We will try to keep 100% of our permanent workers as possible. As the market opens up and production goes up, then we are committed to admitting everyone back onto their jobs.
They say in every town there's a signal of a flower. It's been a rough patch for most of the flower workers here in Kenya. And right now they're all smiles because they can go home knowing tomorrow they have somewhere to go to. Nick Mudimba, CGTN, Naivasha, Kenya.
You're watching Global Business Africa. Time for a short break. Here's what's on the other side. We'll take a look at the effect of the COVID-19 pandemic on jobs in the United Kingdom. And China and the United States plan talks to evaluate the Phase 1 agreement sometime in the future.
How will your world change today? What happens here? What happens there? Or what do you make happen for yourself? If it matters to you, it matters to us too. Your stories are these stories that need to be told. Africa Live. Find your voice.
Welcome back. You're watching Global Business Africa. These are the stories making you headlines at this hour. Let's start in Mali, where the Army Colonel Assimi Goita has presented himself as the head of the junta that ousted Mali's head of state, Ibrahim Boubacar Keïta. Junta members met government ministry officials to map out a return to stability a day after they detained the former head of state, or rather essentially deposed him in a coup. Keïta resigned and dissolved parliament after mutineers detained him at gunpoint. In the meantime, the African Union has suspended Mali from the continental bloc in the wake of Tuesday's military coup. Over in East Africa, South Sudan's army says that it has halted the disarmament exercise in the northern part of the country, where it ended up clashing with armed civilians. That confrontation was particularly fatal. It left 150 people dead. South Sudan's People's Defense Force, however, says it's continuing disarming civilians in other parts of the country. The government launched the exercise in a bid to stop intercommunal violence. And finally, 1,600 volunteers in South Africa have signed up for the first trial of a vaccine that has a non-replicating version of a common cold virus. It was developed in the United Kingdom and is being tested in several countries: England, Brazil and South Africa. Those are your headlines at this hour. Now, with so many restrictions on how we live and how we work during this pandemic, it was pretty clear that economic activity, regardless of where you live, was going to take a hit. The only question was how big a hit would eventually see. By early August, the United Kingdom's economy had shrunk by a record 20.4% in the second quarter. Employment figures are equally stark, with more than 700,000 job losses since the start of the pandemic. But some businesses, as you're about to see, are expanding and employing more staff.
Many lives have been changed by COVID-19, even if most of us haven't yet been ill with the virus. How we shop, socialise and work have changed for the majority of people. Because of fears around public transport in towns and cities, Pure Electric is selling more electric scooters and bicycles than last year.
Everything is just on steroids now. Everything is going fast. So we've gone from around 30 employees at the beginning of the year to about 150 now. We've gone from largely selling online and having one store in central London. We've now got 13 stores and several more already planned in different cities around the UK.
The company, which was established 2 years ago, is about to open stores in France, Spain and other European countries. It's an alternative way to commute to work in a cheaper and safer way than in cars, buses and underground trains, keeping a distance from other people. The UK government is trying to encourage more spending. Under the Eat Out to Help Out programme, it's been paying half the price of a modest meal on Mondays, Tuesdays and Wednesdays, which has seen many restaurants doing brisk business on those days.
What we want to see is a return to economic vitality and health, and some parts of the economy are undoubtedly showing great resilience, but clearly there are going to be bumpy months ahead and a long, long way to go.
Shoppers are back, but not in the same density as before the pandemic and lockdown. And there are questions around how much people are spending as opposed to online. But there are indications that the economy is slowly improving. An important element is that more people are holidaying closer to home this summer than in the past, and they're spending their money in the UK.
In North Wales, Sip World has 3 attractions near Snowdonia's National Park. Camping sites and outdoor adventure centres are busy this summer, as hundreds of thousands of tourists are enjoying time off in the UK rather than France or Spain.
We are now looking at opening our 4th site in South Wales early next year in Easter. We're looking at our first site outside Wales, our first urban site in Liverpool. We are expanding, we're spending money, we've got the backing of our bank. And I think with people now not going abroad, and if we give them a compelling reason to come to our sites, I'm very positive for the future.
These businesses are capitalising on a changing mood and a different economy to 5 months ago. While UK shopping streets are slowly returning to normal, businesses are hoping increased consumer confidence will get them spending. Yolo Abdavid, CGTN, Central London.
On to the ongoing trade row between the world's 2 largest economies. A spokesman for the Chinese Commerce Ministry says that the 2 countries plan to hold delayed trade talks in the near future. Gao Feng says that the meeting will evaluate progress in implementing the Phase 1 trade deal with China and the United States signed in January. He says that US actions against Chinese tech firms like Huawei and ByteDance-owned TikTok are likely to be on the agenda as well. The talks had originally been scheduled to take place last Saturday. Mortgage payments at China's largest commercial banks will be pegged to the prime lending rate starting next week. Chen Tong explores what this policy change now means for homeowners.
This real estate agency in downtown Shanghai has been seeing many home buyers come to ask about a new loan repayment details. The agency says most of its clients apply for mortgages, and so the adoption of the loan prime rate, or LPR, for repayments will have a big impact.
Property prices in first and second tier cities are quite high. 77.5% of our clients apply for mortgage loans to purchase apartments. The loan amount depends on whether the apartments are their first or second homes. If the apartment is the first home they have owned, they will probably apply for a loan for 70% of the home cost, and 30% if the apartment is the second one they purchased.
That comes to a lot of money. And of course, a lot of interest. The LPR reform came into effect last August, but mortgage loans remain tied to previous older fixed-rate agreements. Home buyers can still stick with their old agreement rates if they like, but otherwise, all mortgage repayments will be tied to the loan prime rate beginning on Tuesday at the 5 largest commercial banks. If buyers choose the new system, their rates will vary with the LPR every year. But it all means that home mortgages will now be tied more closely to the interest rates prevailing in the economy.
Previously, interest rates for mortgage loans followed a benchmark set by the central bank. But that benchmark had not been subject to market forces for several years. So to fully marketize interest rates, mortgage loans need to begin following the LPR.
And importantly, since the LPR reform in August last year, average lending rates have fallen. The LPR is certainly lower than the old benchmark rate, and so home buyers choosing to follow the LPR are likely to continue to pay less than those staying with the old fixed rate. Experts expect the LPR will continue to ease as the government acts to keep the economy healthy in the face of the COVID-19 pandemic.
The overall LPR will trend down, though officials have not committed to that. We are confident that following the annual corrections in the rates will give home buyers a better chance to reduce their loan burdens.
The central bank has said it will continue to deepen the LPR reform and improve monetary policy transmission mechanisms in order to further ease lending rates in support of the real economy. Chen Tong, ICS for CGTN, Shanghai.
There is a fair bit of enthusiasm for remodeling that's sweeping across the United States at the moment, everything else considered. But it's been helped in part by low mortgage rates and people spending a lot more time at home because of this pandemic. Hendrik Brandy filed this report from Denver for What's Hot Tonight.
Eddie Castro's Aurora, Colorado home has been a whirlwind of activity. His new floors were being sanded when we dropped by the other day. There's new lighting in the kitchen, a new roof over the house. He'd planned to travel this summer. Those plans abruptly changed.
I was going to pay for this trip, and the corona came, and we decided to use the money for an upgrade on the house, because we're going to be here for a while.
Mark Lindner of Broomfield, Colorado, together with his wife Gina, has been busy upgrading his home. New paint, new kitchen countertops, and new floors as well.
When we knew the stay-at-home order was coming, we didn't know how long that was going to be, so we're like, what are we going to do?
According to a consumer specialist survey, 57% of homeowners tackled a home improvement project between March and May, and that trend has continued.
We chose this summer to remodel a bathroom because we were stuck at home.
Eric Holt teaches at the University of Denver School of Real Estate and Construction Management. He says more time spent at home and the need to accommodate working from home have fueled the rush to remodel. Government stimulus checks and less money spent on entertainment haven't hurt either.
I can't operate, I can't function in this space. I've got to change my space, so I'm going to do it the most cost-effective way I can.
And do it myself if I need to. According to cell phone tracking data, daily foot traffic at Home Depot stores is up 35% over last year.
I've made 3 trips today already.
Very low mortgage rates are also putting money into people's hands.
It's a flood, a tsunami of people, refinancing their house because rates are low, but also pulling money out because we're going to remodel, do stuff to the house.
The longer this pandemic has gone on, the more willing folks seem to be to let contractors inside their homes, sometimes weary contractors.
I think I had offered to get one of the employees a sandwich or something because they looked like they were just running ragged.
The Lindners have found that one project has led to another and to another.
Just being home and looking at every little thing, because we were here all the time, we were realizing that we don't like and this we don't like.
Home is where the heart is, to quote an old saying. That seems especially true these days.
It brings family together. I mean, my kids come over, they know they're here all the time, and this is the place. They know it's safe.
So why, he figures, not make it the best it can be? Hendrik Brandy, CGTN, Denver.
All right, and a quick run to commodity prices for you. Let's focus on bullion, gold bullion to be specific. Gold, of course, has been one of the outstanding beneficiaries of this crisis. Prices have gone up by over 27%, and that's just on the spot side so far this year. Predictably, those gains are now showing up on the balance sheet of gold mining companies as well. Goldfields' half-year earnings, as mentioned, rising by a factor 4, and that's for the 6 months ending in June. Output barely affected by the pandemic. The firm produced about 1.087 million ounces of gold, up about 0.3% compared to a year ago. The company CEO, Nick Holland, described this upturn as, in his words, a bittersweet respite for gold companies. We're back in 60 seconds with more news.
The stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Now, in some circles, argan oil is essentially referred to as liquid gold. And with good reason. Morocco tends to produce what many believe is the best quality argan oil in the world. For centuries, argan oil has been used as a culinary ingredient and also as a cosmetics product. The amber-hued oil is produced by a number of cooperatives in the North African state.
درنا أرغان على أساس هو الشجرة اللي كتواجد عندنا في المنطقة، يعني المنتوج اللي عندنا في المنطقة هو الأرغان. ما كاينش شي حاجة أخرى تقريبا اللي يخدموا فيها العيالات من غير الأرغان. على أساس أنه العيالات كانوا كيخدموا غير في ديورهم، ويعني كل وحدة كتخدم في دارها. فكرنا قلنا علاش لا ما نديروش شي مقر اللي يجمعنا كاملين، حيت كانوا كيخدموا بحال شكل ديال التويزه اللي كانوا كيخدموا بها شحال هذا. وفكرنا باش ندير واحد المشروع ديال موديل للداخل ديال التعاونيه اللي نتجمعوا فيه، منها نحافظوا على الموروث ديالنا. لطيفة يتعبو رئيسة التعاونية الفلاحية النسوية تيريزيت لإنتاج وتسويق زيت الأرغان ومشتقاته. يعني تفضلوا معنا، مرحبا بكم باش نوريكم الخطوات والمراحل اللي كيدوزوا فيه زيت الأرغان. مرحبا بكم وتفضلوا معنا. حتى 2013 عاد درنا واحد الجروب اللي فيه 8 ديال لي كوبيراتيف اللي كنحاولوا نتجمعوا فيه يعني ونقلبوا على الحلول ديال المشاكل اللي كاينين عندنا كاملين. وبالتالي يعني الا جينا نقولوا المهم بحال الا كنتي بوحدك، بحال الا كنتي مع اتحاد، ولكن اتحاد قوه. تقريبا 30 مستفيده اللي كاينه، وكل وحده كتخدم في ليطاب ديال الارغان، يعني اللي هو مبني بشراكه ما بين الجماعه والمبادره الوطنيه للتنميه البشريه. ولاو العيالات كيف ما قلنا في الاول انهم عندهم واحد البلاصه اللي كتجمعهم، كاين ينتجوا زيت الارغان، كنحاولوا نقلبوا على الاسواق وعلى المعارض، وبالتالي يعني داك الربح تيرجع للعيالات كيعاونوا به وليداتهم المصاريف اليوميه ديالهم، وحنا عايشين الحمد لله. هذه المرحله الاولى كيحيدوا فيها القشره الارغان، يعني كتسمى مرحله ديال التقشير. هذه المرحله الاولى ديال التقشير. هذه المرحله الثانيه ديال التهراس. هذه المرحله ديال التحميص. الا بغيناه باش يكون عندنا الارغان اليمونتير كنحاولوا نديروا التحميص عن طريق لا ماشين اللي كدير كدور، يكون فيها الزنين اللي هو اليمونتير. المرحله الاخرى كنخدموا الارغان ديال الكوسميتيك اللي كنديروا الزنين في هذا البوق ديال لا ماشين، وبالتالي كيخرج لنا زيت ارغان. هذا كيتسمى ارغان ديال الماكله، ارغان اليمونتير ارتيزان، يعني بالطريقه التقليديه. ملي كنديروا الطريقه ديال العصير كنمشيو للتعمار. هنا تنديروا فيه تيكتاج وكنعمروا فيه القراعي. هنا كاين البرودوي فيني. بالنسبه للارغان يعني عليه مطالب كثيره، بحيث انه لقاو فيه عده منافع بالنسبه للانسان، بحال الاوميغا 3 اوميغا 9 يعني اللي هو واحد سميتو اللي هي مفيده للصحه. كذلك بالنسبه للتجميل راه كيخرجوا به دابا لي كريم لي شامبوان بزاف ديال الحوايج اللي كيستافدوا بها سواء بالنسبه للرجال ولا بالنسبه للنساء، يعني مطلوب بزاف. ما بقاوش كاع الناس ديال المنطقه كيستافدوا بها ولا الناس اللي هما ديالهم، بحيث انه كيتصدر لبرا. بالنسبه للكوسميتيك كيمشي حتى ل 600 درهم تقريبا اللتر. بالنسبه للاليمونتير 250 300. ولكن فضل التكوينات والتحسيس اللي كيتلقاوها العيالات داخل التعاونيه استطاعوا انهم يفرضوا الوجود ديالهم ويفرضوا كذلك الطاقه ديالهم والذات ديالهم في ذاك المشروع اللي هما خدامين فيه. من غير هذوك المشاكل ديال انهم بالنسبه للاسره كيكون صعيب باش توفقي ما بين الدار وما بين العمل، باش خصنا مثلا نكريو المقار ولا ندبروا عليه. يعني المراه ديال العالم القروي كيكون صعيب عليها باش انها تخرج تواصل مع الناس ديال المحيط ديالها، بحيث انه تيكون داك حشومه لا انا داك فلان كنحش منه ولا هذا. المهم بالنسبه للمراه يعني شحال هذا كيف ما قلنا كتكون حشومه ديال الدار ما تخرج وهذا، ولكن الحمد لله ملي كتكون المراه قويه وفارضه الوجود ديالها وفارضه ذاتها اللي كيجعلها انها تصرف على الاسره ديالها، تكون استقلاليه عندها، تشري داكشي اللي بغات، تمشي فين ما بغات. المهم ماشي الفرق كبير، قويه الحمد لله.
All right, then let's wrap up the hour with a run through some currencies for you. The rand, of course, is around 12% weaker to the US dollar. But let's focus on Kenya. Its weekly debt auction was, to put it mildly, rather lukewarm. The government the central bank only managed to raise about 40% of the usual $222 million it seeks at this time of the week. But Wednesday's auction of an 11-year bond, which went at about 11.3%, essentially explains why today's auction didn't have as much action as you might have expected. That 11-year $648 million note attracted over $940 million in bids, but only $728 million of those bids were accepted. Those are your currencies, and that's it for tonight's edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen on the programme. The many ways to get your feedback back to us, all of them are on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. The news continues on CGTN.